You, I would like to discuss with you question number 46 from paper 1 2019 accounting paper. This is regarding inventory valuation. Question number 46. That is actually easy. Most of the students, they make mistakes because when it comes to question number 46, they are in a big hurry. Therefore, if you are familiar with this type of questions, you can easily take the answer because inventory valuation is also an important lesson, right? You can just see question number 46. Question number 46. Right. Here, question number 46, the following information relates to a product traded by a company. You are given date, description, and you are given pricing method, cost of goods sold for month of July 2019, closing inventory as at 31st July 2019. What I do, you are given part AB under first in, first out FIFO method. You have to show the cost of goods sold and closing inventory. Under weighted average method, you have to mention cost of goods sold and the closing inventory. Here, anyway, you can take only 4 marks, but you can't take more time to calculate the answer. Therefore, anyway, you must understand what is given in the question. Here, like a question available in the second paper, we can't draw formats, right? We can't draw format. Then we can easily find the value. Here, they have asked you to find the closing cost of goods. No, closing cost of goods sold, right? Closing inventory values as at 31st July 2019. Cost of goods sold for the month of July 2019 under FIFO. Here, first you find cost of goods sold. Here, first transaction, opening balance. Second transaction, purchases receipt. Third transaction, purchases receipt. Fourth one, only sold. Then we have to calculate cost of goods sold related this one. That means related to actually only 28 July 2019 transaction. Sold 28 July 2019, sold 2,000 units at 10 per unit. Right. We had to find the cost of goods sold only related to this transaction. Right. If you take actually FIFO method, you have to issue goods what you had purchased earlier. That means you have to issue from oldest stock. What is the meaning of FIFO? You issue stocks from the earliest what you had bought earlier or from the oldest stock. Then here you have to take under FIFO from first opening balance. Inventory we have 1,000 units at 3 per unit. But here they have sold 2,000 units. No? Therefore, you have to take first 1,000 from opening balance, 1,000. That is at 3. Then you have to take, you can take the answer like this. Part A, part B, AB. Then you can organize the answer. Cost of goods sold and closing inventory. We can manage space, cost of goods sold and closing inventory. Right. Then you can produce the answer. This is first one. FIFO, this is weighted average, right? Then, right, you can take this example. Here, if you take FIFO method, you have to issue what you had bought earlier from the older stock under FIFO. Then you can take first 1,000 from opening inventory, opening balance 1,000 units at 3, right? Then you can take 1,000 into 3 plus 10. As they have sold 2,000 units, balance 1,000 you have to take from next purchases. After you finish opening stock 1,000, then you can take from first purchases. Then you have got 1,500 units 5th July at 4. Therefore, balance 1,000 you have to take from this stock. That is what you had bought 5th July 2019, 1,000 at 4. Right, 1,000 at 3 plus 1,000 at 4. That means 1,000 at 3, 3,000. 1,000 at 4, 4,000. Total 7,000. Right. Rupees 7,000 is the cost of goods sold under FIFO method. Then closing inventory. Under FIFO, you will issue from the older stock. That means you had to first issue what you had bought earlier. Then you will finish your opening inventory. Then first purchases, 5th July 2019 purchase, you issued 1,000, then balance 500 at 4. Balance 500 at 4. You can take from first purchase 500 at 4. Plus, then second purchase totally available 500 at 6. Then 506. Right, that is the closing stock. 504, 2,000. 506, 3,000. The total will be 5,000. That is the closing inventory value under FIFO. Right. Then when it comes to weighted average, weighted average means just after new receipt for purchases, you have to calculate the new price of the goods available at that moment. What is the way? You have to take total value of inventory available on that day, just after new receipt, and divided that value by number of units available on that day. If you take opening balance, you have inventory balance 1,000. Then when you purchase 1,005 units at 4, then you have under weighted average method, you can calculate average price. How? 1,000 into 3,000 opening balance plus 1,005 into 4, 6,000. 6,000 plus 1,000 into 3,000 for 9,000. 9,000 just after first receipt 5th July. Value is 9,000 divided by total units 1,000 plus 1,500, 2,500. Then latest average price is 9,000 divided by 2,500. Then total value 1000 into 3,000. New receipt 1,500 at 4. That is 6,000. Total 9,000. Then 9,000 total is 2,500. How to calculate average price? 9,000 divided by 2,500. You take the average price, right? Average price, how much? 9,000. 9,000 divided by 2,500. You take 3.6. 3.6. Right. At that receipt, average price is 3.6. Then again you have new stock. Purchase 500 at 6 per unit. No, right. Again you can calculate new price. Then 1,500 into 500 into 6, 3,000. 3,000 plus earlier. Here you got 3,000 from the second sale. You need another 500. Then total is 3,000. Total value 12,000. Right. Now you can calculate average price at that moment. 12,000 divided by 4,000 equal 12 divided by 4, 3. 3. 12 divided by 4, 3. Right. Then 28th July you have sold goods. Then 2,000 units at 10. You have to calculate average price. You have to take 3. Average price 3. Right. Then we have to calculate cost of goods sold. Under weighted, you have to take 2,000 units at 3. This is the latest average price, 6,000. The cost of goods was 6,000. Then we have to calculate the inventory value at that moment. We have units, total number of units, 12,000 divided by 4. Sorry. Yeah, sorry. We had 12,000 value of inventory. We had 2,500 plus 3,000. No, here not 4,000. Here 3,000. Total number of units 3,000. 12 divided by 3,000 will be 4. 4 is the latest average price. Therefore, you have to take 2,000 into 4, 8,000. The cost of goods sold is 8,000. How do you take? Just after second purchase, our average price is 4. How? At that, just after second purchase, 12th July, we have total value of 12,000 inventory and total number of units 3,000. Then total value of inventory 12,000 divided by total number of units equal 4. Average price 4. At that price, we have issued 2,000 units at 4. The value cost of goods sold 8,000. What is the closing stock value? Total units we have opening 1,000. 1,500 first purchase 2,500. Second purchase 500. 3,000 units we have. Out of 3,000 we issued 2,000. Then balance we have 1,000. Total 3,000 minus issued 2,000. No, we have 1,000 units into latest average price 4. Then our closing balance is 4,000. Right. Then Right. Then you can easily understand the answer. Here in the question, they have asked you to calculate under FIFO method cost of goods sold 7,000 answer, and closing inventory will be 5,000. Under weighted average method, cost of goods sold will be 8,000, closing inventory will be 4,000. How did I calculate? If I again explain, you know, when it comes to FIFO, we issue what we had purchased earlier, oldest, we issue from oldest stock. Then under FIFO, we had sold goods 2,000 units 28th July. Then we had issued from the oldest stock. Then we use opening balance 1,000. 1,000 at 3. We are given price 1,000 at 3, 3,000. Then balance 1,000 from first purchase 1,500 units at 4. No, balance 1,000 at 4, 4,000. Altogether, cost of goods sold 3,000 plus 4,000, 7,000. Under FIFO, closing inventories, what we had purchased recently will be available in warehouses or inventory. So we issue what we had purchased earlier, that will be first issue from oldest stock. Therefore, we'll be having in warehouses or inventory what we purchased recently. Therefore, closing inventory will be now opening inventory finished 1,000 from say first purchase 1,500 units, we use 1,000, then balance 500, 500 at 4. Then from second purchase 500 units at 6, we have total 2,000, that is 500 open first purchase at 4, 2,000. From second purchase totally 500 into 6, 3,000. Total value 5,000. Right. When it comes to weighted average, what is weighted average? We have to calculate average price just after new receipt or new purchase. Therefore, we can calculate first average price. How? You know, opening balance 1,000 units. Just after first purchase, we have 1,500 new. Total number of units 2,500, like this. And value of these 2,500, opening balance 3,000, that is 3 into 1,000. First purchase 1,500 into 4, 6,000. Total value 9,000. 9,000 divided by 2,500. Latest price will be 3.6. But again, we have second purchase occurred 12 July 2019. 500 units at 6. Therefore, again, we have to change the latest price. Calculate the average price. Then, just after second receipt, we have total number of units 2,500 plus another 500 from the second purchase. Total units available 3,000. And value of this 3,000 units will be 9,000 related to 2,500 and new purchase value 3,000. Total will be 12,000. Then, just after second purchase, latest price or average price will be equal total value of inventory divided by total number of units in that inventory. That is 12,000 divided by 3,000 units. 4 rupee will be average price. At that price, we had to issue 2,000 units. Therefore, under weighted average method, we have issued 2,000 units at 4. Latest average price 4. Then cost of goods sold equal 8,000. And closing inventory means we had just before sales of 2,000 units, total number of units 1,000, 1,500 and 500. 1,000 from opening stock, from first purchase 1,500 units, and from second purchase 500. Altogether, we had 3,000 units. From 3,000 units, we have sold 2,000 units now. Therefore, balance will be 1,000 units. Then 1,000 units we can calculate at the latest average price for, that is 4,000 units. That is how you can take the answer.